I'm really just watching, and I'm trying to give you guys exactly from 27 plus years of trading experience, of studying charts relentlessly, studying them literally overnight and just watching, learning every little thing. This is, again, the information I want to bring to you guys because, number one, you're spending your valuable time watching this video, so it's the least I can do, frankly. And number two, I just love it. I'm so excited about this to share it with other people. It's like something amazing is happening. You just got to tell the world, right? And that's what I want to show you guys. And listen, some of you guys won't buy it, like believe in this stuff. That's okay. That's totally okay. Everyone gets to make their own decisions in life. It's one of the greatest things about being human is we get to make our own decisions and our own path. All right. So before we can continue, guys, because I got some big stuff to show, just a reminder that this video is sponsored by the Rumble Wallet. The Rumble Wallet is where I buy and sell my crypto, I buy and sell my gold on a swing trade basis. I got the app right here on my phone. It's fantastic, and it's just easy to use. And not only that, but they're offering you a free $10. So again, you can scan the QR code. But basically, one of the beautiful things about this, guys, is for verified investing, if you just download the app, all right, and you use code verified10, you get a free $10 deposited in. I mean, for probably about 30 seconds of work or whatever. Like to me, it's like, okay, well, if I just spend an hour doing it, it's like no brainer. But for 30 seconds or a minute, $10 done. Think about that hourly rate. Pretty darn good. All right. The only other thing I want to just mention about this is the Rumble Wallet is just awesome because, again, it's just quick. I love being able to grab my phone and be like, oh, Bitcoin's at a great level, buy, or short this, or buy some gold here. We just pierced 4,100, quickly buy some gold, right? So that was the technical levels if you've been following me. But in any case, it's great to use. Rumble, I thank them from the bottom of my heart for supporting me and supporting this channel and helping me do the best that I can be. All right, now back to the charts we go. So number one here, now we're going to go to a bigger time frame, right? What we're going to do is we're going to zoom out. And when we zoom out, we see this chart. Now, this chart, this goes back to the bull market of the dot-com bubble, the collapse, the bull market for real estate, the financial collapse, and then look at this. So number one, that's ridiculous. Like, how do you even chart that? It's basically virtually impossible. But what we can do is we can switch to logarithmic. Now, this is where things get very, very interesting, right? So if we take a parallel and we connect the low, so this is the financial crisis low, and I've switched it to logarithmic. Now, the key with logarithmic, instead of dollar values on the S&P or point values, it starts switching it to be more percentages. So it gives us a better view of the long term. And I don't use, when I'm looking at a chart over the course of a year or 2 years or 3 years, I'm generally, unless it's like a crypto micro cap, which I don't even trade those crap coins, but that's when you got to, basically if something's gone up exponentially, you got to flip it to logarithmic. If it's linear, you want to stick on linear. If it's more of a normal chart that goes up a reasonable amount, not thousands of percentage points. Okay, so put a trend line here at the low of February 09 and connect it through right here, okay? Bring this up, and this is what I wanted to show you. So on the logarithmic, a lot of people wondering why we stalled out where we did on the S&P, all right? What was one of the factors here that stalled us out? And the answer is this parallel. Literally a trend line on the logarithmic chart on the S&P from the 2009 low to the 2020 low. Think about that. The two most major collapses and scary points in the history of the S&P over the last 20 years or so. So 2009 was the financial crisis. That was nuts. Then the COVID collapse was nuts too. So you're connecting those. And when you do that and you draw that trend line up to the high of the bull market of 2021, which was the last peak euphoria before what we're currently in, to the current peak euphoria that we're currently in, look at what you get right there. High pivot and high pivot. So that to me is very insightful because it does tell me that there is a chance for a bigger breakdown in the market. Because really what we saw is the last time we hit this trend line